let's go to Friday's trading. This is the last day of last week. Okay, S&Ps, just one trade, an up thrust comes in here. Oh, and by the way, I'm using a 5-minute chart now on the S&Ps just to show you that the 5-minute chart works fine too. I've got the Weiss wave on this, but you've got a nice trade in here. You take that trade. It's right off the open, and you've got to be willing to trade these things when they occur. The pre-market high, look at the move down from that. Not a lot of volume, but a lot of price movement. Then it comes back up. So a lot of volatility. You've got to be aware, early in the day, there often is a lot of volatility. Taking this last week, my anticipation was we were going to take out this low. It didn't happen. I get this price bar, we're out of that trade. We're not going to play around with that anymore. So, and that's it. That's the only trade that occurred Friday in the S&Ps, at least up until about 2 o'clock. Just didn't have a good day of a lot of trading. Taking a look here at oil, we had a better day on Friday. Crude has a nice upthrust in a downtrend here, and then spring also in a downtrend. Let's take a look at the spring a little bit closer. So we have our upthrust, and then we get this bar. We get oversold in the trend channel, and we close off the lows. Here's an indication to exit that trade, right? The next bar comes down. It's an inside bar, but we still get a firm close. This is showing us demand in here. We have demand coming in, or buying, if you will. Okay. We come down. There's a fair amount of price bar overlap. We again get oversold in here, deeply oversold. And if you remember, I said I'd show you how to see climactic action on the Weiss wave. Well, here it is. You notice that most of the time the Weiss wave has a fairly even move up as the volume builds, right? You see pretty even. Notice, look at this. Look at the big move here right at the end, and also the price action. Well, that's climactic action. Okay. So this is an aggressive spring in here based on the fact that we've got demand showing up, kind of a ragged move down on a lot of volume coming in. We're not flowing freely down, and then we get the spring bar, key reversal bar, if you will, and climactic action. So this is an aggressive play, no question about it. And we rally up. We don't see demand really come in spades here. Again, we get to the point where we're not coming all the way up to the top of the trend channel the way we would expect to. So we can draw in a reverse use of trend line. As we come up here, if we're still into this spring, then we know that we're getting oversold up in here, and we want to be out of that trade if we did trade it. And we notice that what happens? We have an upthrust in here. We never really take out that swing high. We come up to it and we upthrust it. Even though there's demand in the background, by this point we see that the demand is not growing, and the fact that we have to use a reverse use of trend line says that the demand is fairly weak. And we come up, we can take that upthrust trade. When we come down, we get to start to see the clustering of closes in here, and then this price bar. So that tells us that that trade is done. What's the price point for the S&P for the Weiss wave? That's 3/4, 0.75. And now let's go to the last day of trading gold. I think it's the last. It's amazing how many trades set up during the course of the week for the trade. So an obvious upthrust occurs, and notice you've got a lot of volume coming in. This is using the Weiss wave. It's a spike of volume, just one bar, and then the volume falls off. So this looks dramatic, but if we notice this is from the overnight, we have a key resistance level, and this market can't get over it. And so this is an upthrust. Even though we have a dramatic move on this 5-minute price bar, it's still an upthrust. Okay? It's so hard for me to take a trade at the beginning of the open. Yeah, well, that's what I'm trying to show you, is that these we get very nice setups in here. And so the way to think about this, and then the market comes down, we get a key reversal bar here, and notice that this is a spring that sets up, and we're in a protracted trading range. So we can take that spring and feel good about it. Doesn't really give us much. We get a lot of volume. This again is effort to go up. You can see shortening of the thrust in the price bars. Certainly by this point, you got nothing really. Look at the light volume coming in. You've got to get out by that point and really you should be out in here somewhere. So that's Friday's trading. What's the price point for crude on oil? 0.05. So now I want to just do a quick summary here, and then we'll wrap up. So here's the data for the trades here. This is the last week of trading, Monday through Friday, and we had we had 11 trades, 11 up thrusts during the 5 days. So on average 2 a day. We had 7 springs, a little less than 2 a day. We had 5 sweet spot trades and 5 first higher high, lower low trades. So 2 trend trades a day on average, and almost 3 springs or up thrusts a day on average. So you can see why springs and up thrusts are the bread and butter trade here, because they come up all the time. They're actually more frequent than the trend trades. So here's my suggestion to you. You don't have to watch all 3 markets. Just pick 2. Pick S&Ps and crude and gold, S&Ps and gold. Doesn't matter what you choose. You can watch 2 markets. You're assured of having really good trade setups and not have to be, trying to, as I said, try to trade every wiggle and waggle. The structure is there for you. And just to show you that this isn't a fluke, this is the mid-October. I told you I did this in October at the CME. It was sometime in mid-October. I forget the exact week. But here's the trade setups for that week. And it's basically the same thing. You got 15 springs and up thrusts. And it's the same markets, the S&P's gold and oil. I didn't have first higher highs and first lower lows, only the sweet spot. You get kind of a bonus here. But you can see there's a bunch there. There was over 20 trades out of these 3 markets. Again, it's more than 3 trades, almost 4 trades out of all of these markets per day. So again, you only need to pick. You need to focus on these trades if you're comfortable with them, and just pick 2 markets and you'd be fine. And just kind of wrap up here, what we were looking for was trades that occurred frequently, that they're straightforward, there's not a lot of complexity to them, they're easy to identify, they're simple to execute. I gave you 3 different ways to do it. We can identify straightforward profit targets, and they all produce pretty good profits. Not in every case. They're not 100%, and they never will be. But boy, if you qualify them by the elements that we talked about here on these trades, you should see pretty good results from this. Now, I'd suggest that you practice this. Pick 2 markets and start seeing how these trades set up. And then once you get the hang of it, start practicing them with a bar replay type of thing, where you're looking to identify the trade, executing it, entering it, managing it, and then evaluating how you did. And when you're practicing, think in terms of identification, execution, managing, and then evaluating after you finish how you did. You can also, if you're interested, you can join our Thursday night group. We record everything, and we've got folks from all over the world in all different time zones. But we do have a good group of traders, from novices to very experienced, in deep practice. And each week on Thursday, we practice identifying trades, executing them, managing them, and then we evaluate them, how they did. And if you join, you get a bonus of the last month's videos. So you kind of get a free month of stuff that's already happened. They're videos, but you can certainly learn an awful lot from them and get the hang of how deep practice works. So good, terrific, great seminar. Good. I hope you all got something out of it. Yeah, let me just say thank you for coming in. The point here was to create some structure around your trading in a simple and straightforward way. Trading is not easy. That I'm not saying that this is now going to be easy for you. But if you work with these trade setups, and there's only 6 of them, right? 3 for each side, up and down. So really, it's only 3 trade setups that you've got to really learn and master. You've got something that most traders don't have. You've got a structured way of approaching a market in a discretionary fashion, and you can pull money from the market if you get yourself skilled in this. And so that's going to require practice, either on your own or come join us on Deep Practice. We go on for an hour and a half to 2 hours each session, so people get a lot out of it. Okay, well, last question here. On our first higher high setup, if the pullback is on high volume but with shallow angle showing no ease of movement, so probable effort versus result. Yeah, would I take it? Yes, definitely. Yeah, I would take it, because that's most likely that's exactly what it means. Just make sure you've got the good swing up and pretty decent demand on that leg up. Can we get your parameter setups for the Weiss wave indicator? If you purchase the Weiss wave, David gives you a PDF with all the parameters. Can I touch on drawing trend lines? Yes, I can do that. Off higher highs and higher lows. Okay, so the basics is this. In an uptrend, you are looking to draw the demand line first. We talk about trend lines in terms of demand line and supply line. This is a Bob Evans idea. Evans was a Wyckoff guy. So you would draw the demand line first, and you draw it off of at least 2 touch points. So let's say that your uptrend started there, right? So you start here, and there's your second touch point. Okay, and now you take a parallel and you draw it between your 2 touch points. So this would be at A, right? And that's how you draw a trend line. If you're coming down, then you are drawing the supply line. This is your supply line, and this is your demand line. You draw the supply line first off of the highs where the supply is coming in. If you're in a downtrend, you're interested in the supply points. If you're in an uptrend, you're interested in the demand points. That's why you draw the demand line first in an uptrend and the supply line first in a downtrend. And you do the same thing. You do a parallel off of the low between the 2 highs of supply. Okay, and then this is your demand line. So that's the basic way of drawing a trend line. On springs, the question is, data point number 1, a selling climax. Would you include shortening of the thrust combined no supply as an alternative? You could. Yeah, you could. You could. You could. That's going to be a more aggressive play, so you have to watch that more carefully and be willing to pitch it out. And so on that kind of a play, I might not trade a full unit of contracts or stock or whatever you're trading. I might cut that down a little bit, cut it in half. But yeah, you could. It probably won't have as high odds as some of the stuff that I've shown you, but still should work most of the time. Well, thank you. Hopefully see you in our Deep Practice. Come join us. You'll have a lot of fun if you're not in there. I know a lot of folks are in there. I see the names. But those of you who aren't, consider coming in and joining us. All right, everybody. Thank you very much, and take care. And good